There you are. The plummeting price of oil has been in the news over the last few months, and of course it's meant real pressure for the oil companies. It's something the British oil giant BP is not going to be needing reminding of. Its profits fell by a fifth in the 3 months ending in September, and it was due to lower oil prices. It made $3 billion, down sharply from the same period last year. The oil giant also makes a fifth of its money from its stake in Russian producer Rosneft, whose earnings have been hit hard by the plunge in the value of the Russian ruble. Let's talk a bit more about the situation with the oil industry and the oil price. With me is Cornelia Meyer, who is Chief Executive at Meyer Resources, which is an energy consultancy firm. All oil companies, I presume, are feeling the pressure of these falling prices.
Yes, they all do feel the pressures of these falling prices, but more so than others does BP. Because BP is not just dealing with the pressure of the falling oil prices. BP is also dealing with the fact that it owns 20% of Rosneft, the state-owned oil company that actually produces more oil than anybody else in the world, even more oil at these points than Saudi Aramco. It also, so its revenues from there fell from $808 million last year, that quarter, to $101 million. So that's quite hefty fall. It also suffers from the remnants of the environmental disaster in the Gulf of Mexico, of the Macondo well that had a blowout.
But just to return to the falling oil price generally, I mean, I understand that about Russia, but the falling oil price must be, we must be getting down close to cost of production for some forms of oil. Obviously, I mean, Saudi Arabia is still turning it out, what is it, $20 or $30 a barrel or something?
Yes.
But there are some forms, and shale I'm thinking of particularly, well, we must be getting quite close to that.
We're getting very close, especially oil sands. For oil sands, you need about $80 a barrel
to make
it. We are very close to that. We are, we're very, very close to that. And for shale, you need about $75. So we are getting there. But the problem is when you have, you can't just turn it up and off and on. These are very long cycle businesses, very long ranging investments. So if you invest now, let's say in some big offshore production, you say now you invest, the investment will follow through in about 10 years' time. Shale is a bit different because the wells are very short-lived. So you drill one, it lives 2 years, you need to move a few kilometers over and drill the next one.
They could rein back on production quite quickly, do you think?
They could rein back, but they have these investment programs out. They have promised things to investors, and let's not forget, shale has a lot of smaller investors for whom this is important. Very briefly, what happens if the oil price goes down to, let's say, $70 a barrel? Well, Who suffers? The people who will really suffer is the people who do oil sands. The shale producers will suffer. The countries that really depend so much on oil revenue and need it for budgetary reasons would be Russia, certainly Venezuela, because they have, expenditure budgets that are, they need a high oil price, and Iran. So those are the countries that will really suffer. Who will gain? The people who will gain is probably the countries that, can produce slowly, like the Saudi Arabias and so on.
Okay, Cornelia Meyer, fascinating. Thank you very much indeed for that.
Thank you.